Welcome to the first training for TrendWave Scanner. The scanner is available on GFU Live platform. There is also a user instruction for working with it. And in this training, we'll discuss the knowledge you need to be able to work with the scanner. All of this information is available in detail in Start Trading course. So we'll now go over what you need to know and understand when working with the scanner. The first is the trend and how it's built. Let me remind you that an upward trend is built by its lows, and a downward trend is built by its highs. And to understand that this is really a trend, we need 3 points, 3 touches, where we can draw a straight line. There is also such concept as level of trend change. For short positions, this is the last movement up. For long positions, this is the last movement down. Next concept is called early trend change level. If you see a sideways range formed after an upward movement, in which the last movement did not update the highs, this is an early level of trend change. After downward movement, in which we see a consolidation, and where the last movement did not update the lows, this level is called early trend change level. You'll be able to see these levels on the scanner. And the main level will be plotted as a solid line. Early level will be in dotted line. For long positions, they will be colored green. For short positions, in red. You'll also need to know how to trade consolidations. So, what is consolidation? This is a sideways movement in which we do not update our highs and lows. In other words, a sideways movement. It's important to understand that. When the sideways movement is developed, in order to trade with the trend, it's necessary to determine whether this trend is formed for further longs or shorts. If the sideways movement is built on an upward trend until we do not close below the early or main trend change level, this sideways movement is traded from the lower border to the upper. Usually we place our stop losses here. So, how can we tell if this is a sideways movement? For upwards movement, we see a V-type or checkmark formation on the chart with 3 dots, first, second, third. When we see such formation, we can assume that there will be a consolidation within these borders and trade from the lower to the upper border. Short positions. First touch, second, third. We can assume that the price will be moving within these borders and we can trade from the upper border to the lower for short direction. Accordingly, you see reverse V-type or checkmark formation on the chart. The first, second, third points. And the fourth point is our entry point. Or it's also called the second touch. For short positions, we look for touches to the upper border. If we are considering longs, we see second touch to the lower border of consolidation. And the last thing you need to know when trading with a scanner is the concept of volume level. There is a particular volume inserted into the market during the consolidation stage, and the maximum real volume is called POC, and it's highlighted in gold color on the scanner. This level determines how consolidation was traded and the level where we have maximum volume. The scanner shows you that level. And when the price exits and returns to this level, it acts as an entry point. Condition for short, a downward impulse after consolidation; for longs, an upward impulse after consolidation. Please follow the instructions when working with the scanner. We'll discuss the strategies described here on the next trainings. Make sure you start a trade journal with a checklist of conditions specified in instruction. Set the parameters in advance, follow risk management rules, and do not take too many trades at once. Remember that the scanner is not a cash button, but an additional tool to your knowledge. And this instruction is created to help you to identify true market signals and add extra high quality confirmations that increase the probability. Follow the rules, and your trading will become profitable and bring you pleasure. In this training, we'll analyze the indicators on the scanner that will help you to work with it. So, what do we see on the scanner chart? These are the signals for long and short ideas based on the trend breakout. How does it look like on the chart? It's plotted as an idea with parameters for long and short. Next, we see global and local trend by EMA and SMA. EMA is highlighted in blue and SMA moving average change its color by depending on the trend. Long is green and short is red. Ribbon cloud, which is colored according to the trend. Green is for long and red is for short. Next, the indicator shows the buyer, seller, and the bottom. Buyer, seller, and bottom. Let's see an example on the chart. Buyer, seller, and bottom. Next, you need to understand that the lower the time frame, the more signals you see on the chart. And the higher time frame shows you less signals. Next, the reaction from POC level, green triangle for long and red triangle for short. Short reaction from the short level, and long reaction from long level will be indicated by the corresponding triangle color. The levels of trend change are marked on the chart and are highlighted by solid line as the main level of trend change and dotted line for early trend change level. For longs, the lines are green. For shorts, the lines are red. If the trend continues, these levels will appear every time based on trend movement. Consolidation, range, or sideways movement. The state has different terminologies. Provided that we have two touches from above and two touches from below. As soon as we have 3 points, the scanner will indicate you a base so that you can find your first point or the next touch to lower border for long or the second touch to the upper border for short base. This way, the indicator highlights consolidations to help you trade them. Next are the indicators below. Stochastic, which indicates overbought and oversold zones, as well as crossovers and buyers and sellers. The lower QQM mode indicator shows the crossover, the change of interest from buy to sell, and vice versa. The buyer and seller presence and their interest in shorts or longs according to the color and placement. These symbols are designed to help you navigate the market, get the best signals from the market, apply additional confirmations to it, and have increased probability in your trades, and have a visual understanding of the market. Next trainings will discuss the strategies for working with the scanner. In this training, we'll analyze investment ideas from the scanner and the conditions required to take them. The working time frame is 1 week and 1 day. The investment opportunity arises in a place where stochastic is in oversold zone on a weekly time frame. And then we wait for a signal on 1 day, which means that this is a trend breakout. After that, we wait for a pullback into oversold zone, and stochastic is in this zone. In order to take this idea, we need an additional confirmation, such as a buyer indicator on QQ mode. Let's see how it looks like on the chart. And don't forget that it's necessary to manage this position correctly. These positions are designed only for spot. We need a weekly time frame. And as a reminder, an investment opportunity appears in a place where we have a pullback into oversold zone on stochastic. Let's mark up previous trades on the chart and I will show you how they performed. Next, we switch to daily time frame. What do we need to see here? According to conditions, we need to wait for a long signal. When this signal appears, it's necessary to wait for a pullback into oversold zone. And here is our entry point. Next, we got a signal. We got a pullback, but we also received an opposite signal. We don't take such a signal. We wait for the next one, a pullback, and such signal suits our conditions. And we get the result. This signal could not work out, but in any case, there is no 100% probability in trading. But the next one was suitable to the conditions, and the result was gained. These examples were on Ethereum, and now we'll look for examples on Bitcoin. Once again, we'll need a weekly time frame. We mark the zones we need, oversold zones on weekly time frame, next we switch to daily time frame. We wait for our conditions described in instructions. We need a long signal, a pullback, and an idea. There was next long with a pullback with some movement. Next zone of oversold zone on stochastic, and then a signal in oversold zone, and the result. Next signal for long oversold zone, and some result. Later, we see a signal oversold zone, the opposite signal. It doesn't suit us, so we wait for the next long and oversold zone again. And here we can enter into the idea and hold the trade. In order to collect as much as possible from this movement opportunity, we move the stop loss under each previous low every time it's formed. And after the trend ends, at the end of trend change level, you exit from idea by stop profit. This strategy is quite simple. Make sure you analyze more examples on the chart and follow the instructions. In this training, we'll discuss swing ideas, breakouts, and consolidational trading. The instruction also specified the corresponding risk, working time frame, and conditions for considering the idea for long or short. What is the difference between swing ideas and scalp ideas, which we'll discuss next trainings? They differ in working time frame, the number of ideas received on this time frame, and the parameters that are set when taking the trade. Accordingly, swing trades take longer. The number of signals is less frequent, but the risk to profit also differs. So, the amount of profit received for swing trades is slightly higher than for scalping, but ideas take longer time. Please note that in position trading, your profit reaches 30% and higher. When trading swinged ideas, this percentage can reach 10% and higher. And for scalp trading, from 2 and 3% and higher. So let's figure it out. Conditions for long. Signal. After a downward trend, if we trade breakouts, stochastic has cooled down, crossing over. We are above EMA, SMA, and above their crossover. An additional confirmation is presence of a buyer on green ribbon or green QQ mode. Short, rules are completely the same but opposite. We receive a signal for short after an upward trend. A pullback to the trend change level, stochastic has cooled down and crossing over. We are under EMA or SMA or under their intersection. An additional confirmation is the presence of a seller on red ribbon or red QQ mode. Also, do not forget about managing the trades correctly. Now we'll move to examples on the chart. The working time frame is daily time frame. We determine the trend. We need 3 touches. Then we get an idea from the market for long. We get a pullback to the oversold zone and we get a buyer on green ribbon, and this moment is considered as an entry point for us. Or the second option of trading is on the pullback to the main level of trend change. Here also there is a slightly weaker example, but there is a condition, long, pullback, and a slightly smaller result. All the same and exactly opposite if we are talking about shorts. We have a trend, we have 3 touches of this trend, we have a signal for short, we have a pullback to overbought zone, and we get the result. And we get the result even from the volume level. But this is slightly different strategy, which we'll discuss next trainings. Example on Ethereum. The trend, long, pullback to oversold zone, and our entry point, and our result. The same, but vice versa. Trend, signal is received, pullback is received, overbought zone, and the presence of a seller, and the result is received. The next strategy. is consolidational trading. The conditions for trading, according to the strategy, are the presence of consolidation on long trend. This is the second touch from the lower border of accumulation. At this moment, stochastic is in oversold zone and crossing. We are above SMA, EMA, or above SMA or EMA crossover. And if we see a consolidation on short trend, then we trade it to shorts. And this is the second touch of the upper consolidation border. At this moment, stochastic is in overbought zone and we are under SMA and EMA or under their crossover. And do not forget about the correct trade management and risk management. Let's see the examples. Working time frame. Daily. We receive the consolidation. We see the touches. And at this moment, we are in pullback. Pullback to oversold zone. The result 1, the result number 2. Let's see one more consolidation. For longs, we see consolidation, second touch of the lower border, and we are in oversold zone and above SMA and EMA, and we receive the result. Consolidation on long trend, we have the second touch of lower border, we see oversold zone and receive the results first time, second time. If we talk about consolidations on shorts, then we receive second touch from above in zone of overbought on stochastic and sell from upper border to lower border. Let's see an example on Ethereum. Consolidation on short trend, we have the second touch from above border and overbought zone and receive the result. Long consolidation, we have second touch of lower border. We are in oversold zone and receive the result. So, please follow the instructions and understand how it works on examples and try trading on demo account before you trade on real account. In this training, we'll analyze scalp ideas from the scanner and the strategies for working with these ideas. Scalp ideas are analyzed on lower time frames with shorter parameters. In other words, a shorter stop loss and take profits. And this is how scalping differs from swing. Ideas appear more often on lower time frames, but it's necessary to cut false signals off and work strictly according to the strategy, instructions, and also take a lower risk. Do not hold too many trades at the same time, and also follow the instructions of trade management. As well as on swing trading, we can scalp breakouts and consolidations. So, the conditions we need to take long ideas are: first, signal condition after the downward trend, a pullback to the trend change level, stochastic has cooled down and crossing over, and we are above EMA or above the SMA and EMA crossover. And also additional confirmation is the presence of a buyer on green ribbon or green QQ mode. For short, we must receive a signal for short after an upward trend, a pullback to the level of trend change where stochastic has cooled down and crossing over. Also additional confirmation is the presence of a seller on red ribbon with a red QQ mode under the EMA or under EMA and SMA crossover. Let's look at examples on the chart. Let's open ETH on 15-minute time frame and see suitable signals. We have a trend, we have a signal, a pullback, and this is our entry point. Next, after an upward trend, we received a signal for short, a pullback with the presence of a seller, and got a small result. 2, 3, 4% of profit is good for scalping. You don't need to hold your trade too long because such opportunities appear constantly. That's the first thing. But secondly, if you trade exactly breakouts with additional confirmations, then you don't look at signals that appear during the consolidations. Because in consolidation, there is no main condition for 1H time frame, which we use for scalps. So we only need a trend, signal, and a pullback. Usually there are quite a lot of false signals in sideways movement on lower time frame. Only if you see a clear trend, you assess it strictly according to the instructions. Then everything will work out. Let's go through the next strategy. This is base scalping. There are a few differences between trading the base on swings and scalps. We are really looking for a base on 4H time frame according to the trend, which means a short base for short signal and long base for long signal. And we switch to lower time frame to get a breakout of the trend. And only then we enter into an idea. In the same way, we look at consolidation on 1H and we receive additional confirmation on lower time frame from 5 minutes. This can also be done with a base on daily, with a confirmation of breakout on 1H, but do not look at the bases lower than on 1 hour time frame and do not trade them, since the risk to profit is very low and the number of false signals is very high. Therefore, consider trading such combinations. Consolidation on H4, breakout on 50 minutes. Consolidation on 1H, breakout on 5 minutes. Conditions for long. Base formation. It's the first. Consolidation after the signal. Then we switch to lower time frame and get a breakout on lower time frame. It can work for long, and for shorts, we need following conditions. We see a breakout on short consolidation, confirmations on lower time frame. Be sure to follow the trade management rules and remember that risk for scalping should be reduced. So let's look at examples on the chart. Let's find a base on 4H. For example, this short base. And here we are in doubt, right? We got the second touch, and we are considering this trade for short. We are considering it from upper border to the lower one as the indicator shows us. So what are we waiting for? We are switching to lower time frame. And we do not enter the trade until we have received the necessary signal, to be exact, the breakout signal. When we receive it, we repeat everything the same as in previous strategies that we have learned earlier. In this training, we'll study the last strategy. It's POC level trading strategy. In this strategy, it's necessary to understand that the style of trade will depend on the time frame you're on. If you see a consolidation and a volume level after consolidation on a weekly time frame, then most likely this is a positional and investment trade. Please combine such ideas with additional conditions of investment trade ideas from the scanner which I explained in previous trainings. If this trade is on daily time frame, such trade can be traded both too long and short. Most likely it will be a swing trade with corresponding stop loss and TP sizes. On 4-hour and 1-hour time frame, there will be scalp trades. I do not recommend considering volume levels on lower than 1H time frame, since the volumes of the trades are quite weak and reaction may not happen from them at all. So, what conditions do we need? According to conditions, it's necessary that we reach to the level. If we went upwards from the base from which the level was created, this level should be considered for long. And short condition if the previous base, which corresponds to the level, was traded to short. When we reach this level, stochastic should be in long, in oversold zone. For shorts, it should be in overbought zone. Also take into account additional confirmations, which may or may not be there to increase the probability of this trade. In any case, we do not have a 100% probability, and it's necessary to trade with stop losses. Set parameters correctly and follow trade management rules. So, let's look at examples on the chart on the scanner itself. When approaching the level, we are in overbought zone if we are talking about the short zone, and there is an appropriate reaction from this level. Since there was a downward trend on daily time frame from previous cycle, it's left volume levels, which showed a reaction during each movement. You should consider that trading from POC is a reaction trade and can be against the main trend. What does it mean? If we had a level according to the trend, and we are now going upwards, then the reaction will be according to the main trend. And this reaction relative to POC we can trade to short or long. But sometimes such a reaction can break the trend. Therefore, we always set first TP taking into account that this movement won't break the trend. We hold the rest of position in case the trend is broken. Also, if we are considering daily time frame for altcoins, then we can expect a reaction of 10% and more and 5% and more on Bitcoin. Let's look at ETH. The consolidation from last cycle traded downwards left volumes that have already caused a fairly serious reaction several times. And only here we have completely traded these volumes. Therefore, this level doesn't go further. As a reminder, the level is highlighted until we trade these volumes and take them completely. So, let's look. And again, I remind you that there are no guaranteed levels, neither trend change levels, no support and resistance levels, no volume levels have 100% guaranteed that the reaction will be exactly as expected and that the trade will go in your favor. Therefore, we never, under no circumstances, trade without stop losses. But I want to note that even if you trade only according to this strategy, you will obviously have a pretty good win rate. Why? Because in 80% of cases, the reaction is appropriate. The main thing here is to have right trade parameters and being able to manage it correctly. Yes, taking partials, moving stop loss to profit, and not leaving your trade without attention. And 20% of cases, the level can be passed by or tested from the opposite side, inverted, which also gives us an opportunity if we take it from the inverted level for other direction. If you already have this skill and pay attention to your trades. And so, in 80% of cases, there is a reaction. In 20% of cases, we can pass by and turn the long level into short. Therefore, if you stick to only this strategy, you'll have a win rate about 80%. So, the reaction for short is minimal. Again, minimal reaction. Here's quite significant reaction. And as shown, there is also reaction from this level. Stop loss must be set under or above the consolidation itself because we can go through all the volumes and then only give a reaction from here. This also can happen. And at this level, if we place a stop loss here, it would have hit. But if we had set a little lower, then it would be fine. Well, again, yes, there was a reaction, but not without a manipulation. This also happens, nothing to worry. And this level will always remain as a level until we invalidate it. So this is potential entry point for short. In a few cases, we can pass by such levels, but in most cases, there are often such formations that came out of the long consolidations, returned, took the volume level and went along with the trend. And such formations can be on different time frames with different frequencies. So, We conclude our training series. I will repeat once again that it's important to follow the instructions strictly to identify the ideas from the scanners that align with these instructions, to manage risk correctly and follow the rules of trade management. Then you'll be succeeding.